The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday, Tuesday, Wednesday, Thursday, Friday, 11 o'clock till noon Eastern Time at 877-927-6648. And let's see, today is the 29th of November, just about to wrap it up. Tomorrow at 4 o'clock, the monthly chart wraps up, and we'll get into that probably tomorrow, see what's happening. But in the meantime, there's been some fabulous movement to the upside over the last, since yesterday morning, in fact, since the very low that was made in November the 16th. Yep, November the 16th at 1340 in the E-minis. Now, I'm looking at the E-minis, and I'm looking, and this is leg C up. So that says, because we made a new high today in the Dow and the S&P and the E-minis, that you couldn't get leg D in the ChapmanWave until you get a peak C. So imagine tomorrow there's just a gap down opening, or we close much lower than the high today, and we do not make a new high by even 1 penny or 25 cents in the case of the E-minis. That means that you cannot get leg D until the very earliest Monday, which would be a new recovery high. So that's if the ChapmanWave buy mode and everything is in place to say that there should be a buy mode to a leg D. The 120-minute chart is also in leg C, and the 120-minute chart in the E-minis has a very strong 96% is the stochastic level, and holding flat is just about to turn down. The on-balance volume is just turning down. It's a hint that you got to be a little bit careful right now. And even more important is this a very strong leg C. Now, the candle that's formed, let me just expand for those of you, oh, here we go. For those of you who are looking at the Tiger TV or tiger.mobi on your mobile device, getting my mobile device right now. I had it already, then I completely forgot about it. Hope the volume doesn't come on. It's always a little embarrassing. No, that's a silent ringer volume. Everything's set to go. Now I can see the charts, just like you're looking at the charts now. It's funny. I'm growing very accustomed to the white background charts, but when I go to the black ones, the black background with the red and green candles, it's just I see it in an instant, so I have to look a little bit more. But the reason why I like it is because I can get that background coloring, and the background coloring is something that I've used for many years. It's a little more difficult to see with a black background. This is much easier. It takes a little more work because I have to change colors and that sort of thing. But what is important about it, it shows you very, very quickly the levels of consolidation, levels of support. Had a level of support. It just tucked underneath yesterday, intraday, and then ran up. So this is leg C. There should be a pullback, and then a leg D. There's no other wave count unless it fails completely. It's a little unusual. So at this particular point, you've got, I'll run the numbers so that you can, you know what we're looking at. I'm looking at the Dow up 53 at 13,038. Actually, you know what? I've shown these charts, leg C in the E-mini. We'll have to change the contract very soon. And leg C in the 120-minute chart. So let's get out of that. We're going to go to the Dow, INDU. Well, first of all, thank you, Steve, for your sounding good. Good recovery there, and it's great to have you back there. Oh, it's leg B. Ha! What am I talking about? It's leg B. In the, let me just double check. Did I miss something here? The 79619. No. We're only in leg B. Oh, that is amazing. All right, leg B up in the Dow, but the stochastic has not reached 80%, so I don't really have a confirmed buy mode in place there. I do, funnily enough, in the E-minis, but they trade around the clock. So that's the Dow. And the Dow says tremendous support now, 12,916, the 200-period exponential moving average. We're about to bump into resistance, the 50-period moving average right there, and that's at about 13,070. The high so far today is 13,062. So the upside is kind of open to that very ugly candle of the 7th of November, the high of 13,228. The downside has tremendous support now between 12,980 to 12,950 is the initial very strong support, but Absolutely, the 200-period moving average with the 9-period exponential moving average. That's that line right there. Let me open it up a little bit so that you can see it even better. That line right there, moving up, is just this moment crossed positive. When the 9-period moving average crosses the 200-period moving average, it's at least a sign to say that internally, the shorter look-back period is now pushing above the longer look-back period. That, to me, is very important. Now, here we go. The weekly chart, I can talk about the weekly chart in the sense that I still think the weekly chart is actually very poor in the weekly chart of the Dow. Technically, a lot's going to happen, and it's going to be sustained. It can't be just one quick move to 13,300, because even then the MACD will not cross positive. All it's saying is that this could be a sustained move if we were to expect that the fast-moving average, and this is what I teach in my courses, how long it takes for the fast-moving average of the MACD, the green line there, to cross the red line. That is really important, because if it continues, if the fast-moving average continues higher, that is time and price to the upside. If it deflects lower, it's a very poor failure pattern. So I'm going to watch that closely. Monthly chart is still looking pretty good. There's nothing much to say until we close out tomorrow at 4 o'clock. S&P, SPX, I'm going to do this. Now, I'm going to go through these numbers, but before I do that, I want to mention we have just launched the Salvation Army Tiger Dollar Sale. The reason why I wanted to bring it up right now is that today a week, for 2 days, 2 solid days, that's 8:30 in the morning till about 5 in the evening, Thursday and Friday, December the 6th and 7th, I'll be having my all-day webinar. It isn't just an all-day webinar. I'm going to be following up with the attendees. I'm going to be having, they can ask me questions as much as they want. I'm determined to get more and more people at least interested in studying the ChapmanWave so they can add it to their own methodology. So this December Salvation Army Tiger Dollar Sale, normally we offer a 10 to 20% bonus when you purchase Tiger Dollars, but this sale, everyone gets a 25% bonus on their purchases. And the way it works is if you spend under $1,000, then 5% of the purchase will be donated to the Salvation Army. If you spend $1,000 or more, you get 10% of the purchase donated in your name to the Salvation Army. Reason why I want to emphasize this is that you can use your Tiger Dollars to the exact amount of your service, whatever it is, of the service that you either have or you would like to get here at TFNN. In my case, not only for my webinar am I throwing my CD introducing the ChapmanWave methodology. Here it is. I'll show it to you if you're looking at Tiger TV. You'll see it right there. That's introducing the ChapmanWave methodology, trademark. Methodology by Basil Chapman, chart analysis in the stock market. And it goes through all these different patterns that are repeating over and over and over. Now, what's important about that is $249. I'm just throwing in. I throw in a webinar. That's like, I don't know what it is, $90 or something. I throw in a webinar for nothing. I also throw in my a month of my opening call. Hey, we've got some stocks that 2 stocks. One is making all-time highs. 52-week highs. Another one just had almost a double-digit gain in just a matter of days. It's out of the blue. I mean, just the chart pattern was beautiful. We bought it, and it's acting really well. So these are the techniques that you can learn. How to trade, how to use the ChapmanWave. So when we're looking at these particular things, you can actually specify that this amount of money for your Tiger Dollars is what you want to pay, you want to buy, which would be the equivalent of, say, the webinar, and you get 25%, and you get tax deduction. I mean, I don't know how much more I can throw in. It's just, I love teaching these things. I haven't done as many as I always do every year, so I miss them. I love doing them. So please go to the front page of TFNN, because this is all you have to do. You just have to check out that TFNN front page. It says right there, new Master Trader Series class with Basil Chapman just announced. It's the Master Trader Series Level 1, December 6th and 7th. Remember, it's the Master Trader Series in the ChapmanWave. It's teaching you from the very beginning how to identify the lowest low bar, how to get a buy signal, what makes a buy mode. That buy mode should take you to peak D. How do you do a D? Let me show you something very interesting here. In my, I don't remember which one it is. I'm going to go to this one right here. Is that it? Yes. Okay. In this particular example, here's UTX. This is what I sent to subscribers. Yesterday I said I wanted to buy a call the day before. And then yesterday I said I wanted to buy the call, but I was a little uncomfortable about a number of things. I can't actually talk about them right now because it's kind of detailed. But I was a little uncomfortable just slapping on a buy, and it would have been to buy the option call, and I wasn't sure of the price, and I was having trouble trying to getting the exact information I needed. But I wanted to buy it. It closed up in the 30s. I wanted to buy it at below 12 cents or lower, and that option call was just perfect because there was a ChapmanWave cup that was forming, and in the daily there was a very strong stochastic and MACD rally and a price rally in UTX, and it had closed at 70. It closed at about 79 something. Well, it pulled back to 77.25, something like that, 77.37, and then ran. The 80 strike went from 10 cents to 37 cents. So these are the techniques. The fact that we missed it is still not the technique was there. It was just bad implementation of my idea. I got a little afraid of what was going on in the market based on rumors and all that sort of thing. I thought if we bought it and then it pulled back, then it'd be kind of stuck. Even though it was 10 cents, I didn't want to gamble. I wanted things to be very specific. But there's the technique. It went right there. And then there's this technique when you get to peak D of the instant restart, which has gone to a brand new buy mode to leg D, peak D. And then there's a doji candle. So those are the techniques that I'll be teaching you. So we did not get this trade, but everything was there for already. It would have been an over 30%, almost a 40% winner. So please consider that. These are the techniques that I'll be teaching in the webinar. If you trade the futures, trade anything actually, I will show you what you can do and how you can enter the trade. Is it perfect? No, nothing's perfect. But sometimes the technique's fabulous. Your implementation, the human element, is what we try to overcome. So, and this CD's 476 slides. I mean, just chapter after chapter. So now look at this. The S&P is in leg B. I say C, but it should be B. To the upside, it's the futures that are in leg C, a little bit ahead because they trade overnight. Now, what's happening is that the stochastic is at 77%. There's a level that I look at to be able to get the buy signal confirmation to a buy mode when there's this kind of very exceptional rally to the upside. But wait a minute. In my newsletter, what I showed was, oops, I haven't got it here. I showed what can happen. There we go. What can happen when you get matching left side to the right side. Here we go. Left side to the right side of the match from the June low. Had a question, I was just checking to see what it is. Look at this. That matching the V-shaped pattern, and you remember I spoke about that peak B consolidation, which matched the peak A consolidation here. Now we've gone to leg B, broken that downtrend line. So far, this has to be considered very, very positive. And the VIX is down back at $15.20. So I think this is very nice action thus far. So I'm going to talk more about it, and I'm going to talk about this question then about the peaks in the ChapmanWave. I'll get to it as soon as I get back. Got a question about gold as well.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks. Basil Chapman. Just double-checking. Yeah, this is so frustrating. I pulled up the chart of HLF, which is Herbalife. I've done it. I don't know how many times I've done it completely from the day one to present time. And I pulled it up. It's when I got shut down when the storm hit and my service went down immediately. It's come back, but it's come back with the wrong platform, so I haven't got it. So we've got online. Oh, we've got a whole bunch of callers here. All right, let's get going here. I'm sorry. Took a little time, too much time at the beginning. Let's go to Mike in New York. Hi, Mike. How are you?
Good. How you doing?
I'm very well, thank you.
Okay. I'd like to look at Herbalife, and what do you think of this right here?
I think it's a very, very weak stock. It's been on my list as a weak stock. I think I spoke about it when it made that peak top. I think it was G at 73, round number high. Oh, this is so frustrating. I've got it there somewhere, but if I get it, then all the new charts that I've got won't be on it. So 73 is the high back in April of 2012. It plunged down, made a dreaded H. It's retesting the low of 42.15. As we speak, the low today is 42.18. It missed it by 3 cents. But where is the best position? Do you know when earnings come out?
No, I think they came out already, and the next earnings date is in February.
Okay. Horrible looking chart. But it's so close to the 40.64 support in the 200 period exponential moving average. there are only two ways to play this. This is like a Chanos, where you say this is going down, and you're going to short it right here, and it doesn't matter where it rallies to. You just hold it until it breaks and eventually goes down to the 35 area or 30. I can't do that. What I would say to you, it's a very poor-looking chart, but it's right at a moment where it's trying to make some kind of a bounce. So the only way I would do this, if you were looking at, if you played options and you put in an option, like a February option, a 35 February option, I don't even want to get to that. I'm going to say to you that it would be it has been on minus. In fact, I don't know why I don't have it. I did work on this just the other day. I thought I did in the white background. Well, whatever. It's just not a very good-looking chart in both the monthly and the weekly. The daily has a potential to bounce. Could it bounce from 43.73 to 46.18, the 9-period moving average, or even a little bit higher? Yes, it has that opportunity to do it if over the next 2-3 sessions it doesn't break under 42. How do you play it? Well, if you've got the patience, I would just put in a reminder, ring the bell or something, that if this thing bounces to 46.52-ish to 47.20, that area, that would be the perfect area to again look at it as the potential to arch over and to come back and zip right down to the 40.64 level. Another way to do it is knowing that there was a chance of a 10% rally. You just start a tiny position here, but it's come down really sharply. It's kind of ready for a bit bigger bounce. I'm going to say to you, you're absolutely correct. You're looking at this as a short, right? I didn't even ask you. Is that correct?
Yes. Yeah.
Okay. So I'm in total agreement with you. This has the look to it that it's going to go down to the 35s. It could even be lower over a period of time. Just to be safe, I'm going to say to you, at this particular time, risk reward, unless you start a very small position and it takes out the low of today, if it takes out 42.80, if it goes under 42.18, you add to that position. That's the only way I would do it now. Small position, add to it if it breaks down, or you're just going to have patience, wait for the arch, the next arch formation. If it gets back to the high 46s, low 47s, absolutely, give me a call. That'll be the one to short.
Yeah, no, okay. Sometimes you have to have patience. Let me ask you, with the moving averages, does it pay to, as a risk reward, to wait and see how it handles some of the, the moving averages?
Absolutely, like the 200-period moving average, which is at 40.64. Well, that's 3 points. That's still 9%, 8%. Yeah, but I know you're looking out. You'd like this almost like an intermediate term short, the ones that I like to try to get. Yeah. I'm going to suggest that you either have the position where you're going to just nibble. I really mean nibble on it right now to give you a feel for how it's participating as the market moves up and down. And then you can add to it if it does break that level, or you just need patience to wait for a bounce. Now, I'm going to say to you, if for any reason it takes out today's low, and it gets to 39.98, even though that's the area where it could turn around, that's the area that I'd be watching, because if it persists and goes into the low of the day at the close, that's a sign of weakness. It's going straight to 40.64. Hope that helps you, Mike.
Yes,
Thanks so much for calling. We'll be back with Joe, Mike, and Ari straight after this break. Basil Chapman. Don't forget your Tiger Dollars. This is your Tiger Dollars that goes to the Salvation Army as well. I'll be right back. 877-927-6648.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. Basil Chapman, Tiger Technicians. Hey, don't forget about this. I'm going to keep reminding you because it's such an incredible deal. Imagine you're going to get a newsletter. You're going to get one of the newsletters. Let's say it's priced at $7.95. During this sale, this Tiger sale, this special Salvation Army Tiger sale, if you bought it and you prepay for a year subscription, you spend $636, so you receive a 25% bonus of 159 Tiger dollars, totaling exactly $795 Tiger dollars altogether. That would apply to your subscription, and you're getting a potential tax deduction. This is this is quite something. So please go to the front page of TFN and check it out. And check it out. My webinar coming up. We're going straight to Joe in Boston. Hi, Joe. How are you?
Hi, Basil. How are you?
I'm very well, thank you.
Good. Happy holidays to you and your family.
And absolutely to you.
Hey, can you take a look at Juniper for me? JNPR?
Yes. JNPR trading at $18, up 21 cents. Do you have a position in this?
No.
Okay.
Not yet.
Not yet. Not yet. So let me ask you the question. Which way are you going to go?
Looks like it's putting in a decent bottom here. I don't know. I mean, what do you think?
Okay, so this is what I'm looking at, folks. Juniper monthly made this unbelievable. It's what I call the Eiffel Tower peak peak D top. It goes straight up and then straight down. Here is a case where it came down in way quicker time than it went up. If you had to look at the history, though, there was a perfect plumb line. I'm going to teach about this plumb line in my webinar based on the ChapmanWave techniques. Look at that. The left side, right side. Let me just do this so people looking at Tiger TV can see. There's the left side. Make it green. Right side, make it red. You've got to find out where the plumb line is. Sometimes it's right in the middle, and sometimes it's just above. Look, the price came down to within pennies that previous that previous spike to the upside in the monthly chart from July of 2006 down to the low of 2009. So here we've got another one, but it came down much quicker. So the history of this chart is that when it's successful and it's on its way up, unlike the dreaded H pattern that it made back in July of last year, normally it's gone straight up. So now you've got to say, okay, that means that any rally at this particular time is only trying to get into the arch, the previous peak that of importance. In this case, 20 was the high. September of this year, it's pulled back. Right now it's trading at 1802. The weekly chart has at a higher level on the right side, which is a positive. I know what you're looking at, but this is what I'm looking at. If you are, see, Joe, if you look at your monthly chart, your weekly, we've looked at the weekly chart. The weekly chart says it's had a successful high-level consolidation. If you look at the daily chart, you see why. And the reason why is that the 200-period moving average has been such strong repellent. Back when it hit 1958 in peak F, the 9th of August, it went to 1958, and the 200-period moving average was at about 20.16. It got repelled. The next time it went to the right arm extension leg, G up, went above it to 20 round number high, failed, and came all the way from the round number 20. I love to teach about those round numbers, as well as 16.10, the low of the 12th of October. Beautiful candle. It has a single leg up. Where does it go to? To the 200-period moving average. It goes to 19.22, and the 200-period moving average is at 19.22. It pulls back, makes a lower low, starts a brand new buy signal, and the buy signal goes peak A, peak B, and it fails underneath that level, that 200-period moving average of 1853. Now it's had a higher low, a very successful series of up moves, taken a little longer, and it's a little shorter in height than the previous one, but the stochastic is higher and the MACD is turning up. So I can see what you're looking at. This is what I'd be doing. If you bought it right here at 1803, knowing that we are within, I actually think that we're about to make like a mini top based on the futures and based on some of the other charts I'm looking at. So right now, a mini top meaning intraday, and we might today make some kind of a top, have a bit of a weak session tomorrow, and rally again Monday. I would suggest that you nibble at it right here at 1804, thinking 1720 is the 9-period moving average. It shouldn't get to 1720. It should get to maybe 1746 to maybe 1729. So my impression right now is you might be buying the high of the day, but you're buying it saying, I think it's going to pull back and hold the 1750s. And the next move up is going to challenge the 18.73. 1851 is the 200-period simple moving average. 1873 is the 200-period moving average. This time, it's acting like a magnet. There's a really good chance that it's going to actually spike above it and hold above 1873. So you understand
part of my thesis, Basil, and I'm sure you've noticed this, is that a lot of the money managers, I think, are going out there looking for stuff that's underperformed to try to play catch-up at the end of the year.
That's exactly what I've been talking about in my opening call, and what I've been saying is, and one of the reasons why we got a particular stock that is, as we're speaking, it's making 52-week highs, and it was nothing. People didn't even want to talk about it for a long time. Famous high-tech. And the reason is exactly what you were talking about. Underperformance means that they have to go for what they would normally consider riskier trades, but now they see that the other stocks have really had a big run. The ones that were, like Juniper is a famous one from way back. Juniper was once, do you realize? You probably do. Juniper was once 244.81. In fact, that's split, but it was 244 and it's gone down to $14. So this, I think you're absolutely right, that to try to get that extra kick, they don't have to put as much money in as buying a $144 stock, or, you know what I'm saying? A $17, $18, $20, $22 stock is what they'd be looking for, preferably even lower in the low teens. I think you're absolutely right. And you know what? You've got yourself, because you would start a small position. You could even wait. I'm absolutely sure we're going to have a pull. Oh, the Dow's down 5. There it is. Bad news. Oh, there's Boehner on TV. So we've got. So this is exactly what we're looking at. You're going to get your entry point, but I suspect there'll be a counter, something or other coming in, and by Monday, I think if the ChapmanWave makes that leg D, and we are going to make a peak C to it's only B. So there should be even more rally.
Right.
Yeah. So I like it. I think that you've got a very high risk reward in the sense that if you nibbled at it on a pullback here, but you already started and enter at 17.15,
right,
I would put a stop at 17.16 because 17.18 is a 9-period moving average support.
Right.
And what would happen is that you've got a potential for about a 40 to 50 cent loss, but you've got a 2 to 3 point move, 2 to 3 times gain. That is 2 50-cent moves up, possibly even 3. So it's $1.50 that you get to the upside if you buy it on this pullback. And I think that's a good risk reward. The reason being that it has made a higher level consolidation in the weekly chart. The monthly, I have to tell you, is still looking terrible. So we're not talking monthly.
But if a close over 20 improves the monthly
all of a sudden starts leg B up in the monthly, and the MACD for the first time can start to get a chance to cross by. Yeah, I like your thinking, because what we're doing here is we're trying to weigh the risk to reward. In this particular case, I believe that what I would say to you is if it starts to fail at 1873, be careful, because that could be a repellent. But if it closes above it, that's going to be positive. Hey, good eye, Joe. Good eye. Good thinking.
Happy holidays.
Thank you. Bye. And happy holidays to you. Let's go to Mike in Ormond Beach. Hi, Mike. How are you?
Great, Basil. I'm looking at the DXD, and I did scale in a little bit this morning with a quarter of a position. And I saw there was a gap left over back in November 7th or something like that, between 48.51 and 48.62, and the way it was coming down, I figured it would get down in and fill that, and that's where I picked a little bit of it up. But
well, first of all, I have to say to you, congratulations. That was perfect timing. As we've been on the air, the Dow's gone from a plus 50 to a minus 20. The S&P has gone from plus, actually this morning it was up at plus 8, plus 9, and now it is only up 2. And my thesis, I have to tell you, to be quite honest with you, based on the DXD, which is the ultra short Dow 30 Pro shares, it's making lower lows and lower highs from the peak D that it made. Right, folks, this is really important. If you're looking at my charts, you see that blue line there? And Mike, I don't know if you can see it if you're looking at the chart right now.
Yes, I am on Target TV right now.
Well, look, that doji high at peak D at 53.29, 53.10 was the 200-period moving average, which it hasn't even been. It tried to get there and failed back on the 4th of June. This is now the bearish side of the Dow, folks, that we're looking at. Now, what happened is 45.19 was the low. It went peak A, peak B, peak C. There was a left side, right side price time match. This is this chart I didn't make up right now. This is a chart that I've been working on for a while, and it showed the left side, right side. It spiked through in what I call the ChapmanWave cup and ladle formation, which always goes, not always, almost always goes to a leg D at least. Well, leg D coincided with hitting the 200-period moving average. It got repelled from 53.52 down to today's low of 48.50. Now, my eye says that this is still in a downtrend. I'll be wrong if for whatever reason by Friday at 4 o'clock the DXD closes above 50.88, because that'll be a really nice recovery, and you'll see the opposite. Now, what I showed my subscribers this morning, funny that you should mention the DXD, I showed them the DIA. I do this every day. These are the charts I show. As much as I can, I try to get the diamonds out. And I said, I've printed it up right here. It says 11:29.12 at 130.35 now. That was early this morning. Good chance that the 200-period EMA resistance at 130.59 will be strong. Where did the Dow Diamonds go to? 130.54. Missed it by 5 cents, and it's been repelled with a doji candle. And that goes to my point that I think that the diamonds are going to pull back, and they're going to pull back from today into tomorrow to give a peak B in the Dow. And then we're going to see, because this is definitely a news-driven market, and if, in fact, there is a chance that there is going to be a new leg C to the upside in the Dow above the high that was made this morning, then your DXD is going to pull back. Now, right. I know that there are cycle dates and a whole bunch of things coming in. I never refute those. All I say is that I have to go with what my technical indicators are showing. And so far, the technical indicators are saying right up until this moment, while there could be a pullback, there should be some kind of a recovery to a new high in the Dow, and that should take it above 13,062.56. It doesn't say how much, but that's what I'm looking at. So now let's get to your trade. The DXD, you've scaled in. So right now, all your positions are in a profitable situation, right? Well,
all I did was I scaled in. I took the amount and I divided it into 4 quarters, and I put 1 quarter of it in this morning. I saw, what I thought was a good opportunity filling that gap, and it got down there, and that's where I got a quarter of my position. The rest I have set aside in cash waiting.
Okay. So let me, I need to think this through. So because you had 4 positions, you want to have 4 positions, you are thinking that this could be your thinking is that this could be a far more serious top coming up, right? I
saw 1,300 area in the Dow kind of acting as resistance, and, I saw we got up to that, and then I didn't know if we would get much higher than that, and so I figured I'd, put a small amount in the DXD, and the rest I'm just sitting and waiting for further confirmation, and
okay, that makes it clear to me. I'm going to suggest at least the two positions if you get to second position. You've got your first position.
Right.
If the Dow, which is down -3, and the S&P is up $1.48, if later in the day, I'm going to go with the Dow, if you don't mind, just for the moment, sure, because that is the route. So let me do this. I need to go to my 120-minute chart. Yeah, and I've got a potential peak F in the 120-minute chart of the Dow. So that says there again, it could be an alternate leg A or an F. Right now, says to me based on the MACD and the stochastic that I'm going to have to go with the, my thinking has to be, haven't got that. Give me 1 second. Input alert style display update. Why doesn't it display the update? All right. That says to me, okay, I've got it. So the 1 quarter position is good. I would say you could add to the quarter position. You know what? You could even add to the quarter position right now, but this quarter position has to have a stop at 12,999 to 13,004. You know what? Let me go through the numbers. When we get back, I'll give you all those numbers, and then we'll go on to Ari and Arcadia. You don't mind waiting?
No, thank you, Basil.
Okay, good.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share. Over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at tfnn.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success, and it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
Hi, folks. We are back right now with Mike in Ormond Beach, Florida. We're talking about the DXD 200% short the Dow, and my bias is still to the long side. It's just, I have to do that. That's what I'm looking at until I got evidence. But on a very short-term basis, Mike, I think you've got yourself a very nice entry point. I'm going to make a suggestion. If you want, on any little bounce now, you could add a quarter that's going to be a trading position, and that trading position will have a stop at about 13,012 on the Dow. But if it starts to, there's an acceleration, between these two sides, I don't think anything much is going to be done. It's just going to be this hassle going on and forth, back and forth. So my suspicion is that we will go towards the low of the day of 12,962. If that's the case, then I'm going to recommend that second position that you add, maybe right now, which has this a fairly tight stop, that's the position that you just have a rolling stop as it goes down. In other words, the DXT, as it rises, that can have a trading stop. And the core position that you got, I think you got it at a very good price. So that's what I think I would do. But I would also, tomorrow afternoon about 2 o'clock, if the market is down quite sharply, I start getting ready for a switch around to the upside coming in on Monday. So that's just my thinking. So I hope that helps you. But at this point, I don't have enough evidence to say that you should add more positions as core positions. You've got a position that I think was timed beautifully. I would add another one as a trading position. And I think this might be just a short-term slide towards the 12,938 level in the Dow. Hope that helps you. Thank you very much for calling. Let's go to Ari in Arcadia. Hi, Ari. How are you doing?
Good afternoon, Basil.
So you are looking at
SLV.
Okay, now the SLV has actually acted way better than the GLD. And I've got a particular technique that I use. And let me just check here. Oh, boy, I don't think I'm going to get to all our callers. And I wanted to do this. Before we run out of time, there's a technique that I call the ChapmanWave flat base restart. That's one of the techniques that we might get to next week when I'm teaching my course. It's a little bit more advanced, but it's based on the instant restart./I've got a parallel wave count in the daily. I'm not even going to ask you what the situation is in your position. The stochastic's good. The MACD is good. It's gone to an F/B. The SLV is the iShares Silver Trust. That says to me there could be higher highs, but at some point within about a week, it could be a little more, within 3 to 5 sessions, more like 5 sessions, there should be a retest of the low of 31.74, and it's at 33.10 right now. And that will be a very sharp, quick pullback. So if it's a peak F, that could start very soon. But if it's B, then you're going to pull back. That'll take, say, Friday. Then Monday could go up to C and then pull back. And then by Wednesday or so, you'll get some kind of a top in the SLV. But at this particular point, are you long?
I've been long since August. Remember?
Right. But you're still holding those. So I'm going to suggest something. Don't do anything right now. You're in the right positions, acting well. The weekly so far looks like it's going to hold okay. I'm calling it leg F for the moment, but it could be leg C. So at this particular point, the daily is what I'm going by, and I think stay long, don't do anything. Call me first thing tomorrow morning. Let's take a much greater look at silver and the GLD, okay? If you can.
Great. Thank you, Basil.
Thank you very much. Because the GLD right now has made a peak C in the 120-minute chart, a D in the weekly, and there's a cup formation, but a lot has to happen for it to improve. Let's go to John in Philly if we've got a chance. Hi, John. How are you doing?
Basil, Aussie dollar, ADUS.
AUDUSX. Let me have a quick look at this. I think we ran out of time. Can you call me first thing in the morning and we'll look at it?
Thank you very much, Basil. You have a good day.
Thank you very much for calling. Sorry, John. We've got Larry Pesaventa coming up. Commodities out in floats. Go to the front page. Check out the Tiger Dollars, the Salvation Army Tiger Dollars, and my webinar coming up a week from